Hello, everyone, and thank you for taking the time to review the Santa Clara County, California real estate market analysis for October of 2009. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. And I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of Silicon Valley. If you want to get in contact with me, the best way is really through my website. All my contact information is there. Plus, you'll get access to a fantastic multiple listing service search tool that's all map-based and covers the area all the way from San Francisco all the way down to Monterey. You can also find links to my weekly podcast on the website, and you can also find embedded videos of all my market videos like this one on my website. Now, if you'd like to contact me directly via email, you can send those messages to Robert at soldbyrobert.com. If you'd prefer to call me directly, just dial 408-852-0525. And if you prefer to use one of the online messaging softwares like AOL Instant Messenger, Google Talk, or Yahoo IM, you can use the screen name The Rebel Broker to track me down that way. And if you're a Skype user, the screen name is simply Rebel Broker. Referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate, please feel free to get in contact with me, and I will help you in any way I can. And finally, whether you're interested in property in the areas I directly serve or not, I can still help you find the perfect agent for your needs. Just get in contact with me using any of the message I've outlined here, and I will track down the perfect agent for you in your city. Now let's go ahead and take a look at the supply and demand numbers for past years. This is just the month of October, going back to 1999. As you can see, it's pretty good news. Sales are up, inventory is down, the number of homes listed is down. And you can see that when you compare this to previous years, we're kind of on par with what we were seeing in 2005 and 2003, probably a little closer to what was going on in 2005, simply because we've got sales numbers that aren't quite to that level yet. But we're doing well. Listings were higher then. But, you know, where we are right now is actually a pretty good place. If you look back at some of the previous years, you can see that we had sales numbers that were almost as high as the inventory numbers. Back in 2000, for instance, is a good example, 1999. That's really an out-of-balance market. And what we want to benefit buyers and sellers is to have a balanced market where sellers don't have to wait years to get their property sold, but buyers don't have to feel pressure to make offers on properties before they ever even see them in order to get a property. I can remember living through that time, and it was difficult for people who were buying. And I think a healthier market is one that's balanced, and frankly, that's where we are now. Now, sales are up 25.74%. That's 210 more homes sold in the month of October of 2009 than the same month last year, for a grand total of 1,026 homes currently on the market. As far as the new listings are concerned, they're down 23.25%. That's 435 fewer homes listed in the month than at the same time last year, for a grand total of 1,436 homes listed. The inventory is down 44.63%. That's down 2,581 from the same time last year. That's an amazing decrease, for a grand total of 3,202 homes currently on the market. Now, let's go ahead and take a look at the ratio here. We find that we have 3.12 is our ratio this month, and that tells us that it would take a little over 3 months to get all the homes in inventory sold if the sold numbers and the inventory numbers froze as they are right now. Another way of thinking about that is as a competition number. So from the buying standpoint, it kind of gives you an idea of how much you have to choose from, and from a seller side, it tells you how much competition you have. For every one home that sells, there's a little over 3 homes on the market. That's a pretty good balance. That lets buyers still go out and shop around, look for the home that they really want without feeling the pressure to make an offer as soon as possible. Now, the reason why that's a bad thing is it creates artificially high prices. When you get people into these situations where, you know, a dozen people are making an offer on a property, which wasn't unusual back when we were seeing less than 1 being the ratio, or 1.1, just a little over 1 being the ratio. That was a bad thing. We ended up with very high prices. It created this crazy demand for properties, and as a result, prices shot through the roof. And a lot of that, you simply have to understand that the system was rigged to really create more buyers during a lot of these periods of time with the subprime lending and some of the things that were going on with Fannie and Freddie Mac. If you want more information on that, I've done podcasts on that. You could take a look at those at my website and get a little bit more information on that. But this is actually a much better situation to be in. If it got if this ratio got even smaller, we'd start to see prices perhaps rise again. And I don't think that's healthy right now for the kind of market we're seeing. Now let's go ahead and take a look at what has been going on just chronologically straight back. Now, we're not skipping any months here. We're not just looking at the month of October, going back year to year. We're looking right back to April of '08. You can see everything's trending in the right directions. Inventory numbers clearly are trending down. Sales numbers are trending up. Number of listed homes is trending down. In fact, the number of solds from September to October is down 8.72%. That's 98 fewer homes sold in October than September. Number of listings is up 0.98, less than a percent. That's 14 more homes listed. And then the inventory went down 6.81%. That's 234 fewer homes in inventory than at the same time last month. Is there anything we can really glean from this as far as where we're going to be going in the next few months of 2009? Well, if we look back to last year, we can see that inventory numbers at this time were continuing to decline right through to January. I don't think that's unusual. That's a very normal market thing to happen, regardless of what's going on overall in the market. It's just typical in the winter months for inventory to drop. And even in the craziest times of this market, that trend has always been borne out. So I would say we're going to continue to see an inventory decrease. As we head into November and December, as we did last year, I suspect we'll continue to see number of homes listed decrease, simply for the same reasons. We're heading into the winter season. It's the holiday season. People want to be able to do Thanksgiving and Christmas, so they don't want to have their home on the market. We may not see as much of a drop, depending on what's going on with folks in the foreclosure and short sale situation, but I think we'll still see a drop regardless. It just may not be as dramatic as some other years. It might be more dramatic than last year, though, as we may have fewer homes in that situation where that need to be kept on the market. Sales numbers remained relatively flat last year. Will we see the same thing this year? Normally we see sales numbers kind of drop in through January and February and then start to increase. We saw the increase last year, but we didn't see as much of a drop last year as we did, say, in 2007. This year, I would wager we'll see the same sort of steady performance. I think that there's still folks out there realizing there's some great deals to be had on real estate. And a lot of these folks aren't going to be upset, a few years down the road to look back, and even if the market does continue to go down in 2010, I don't think it's going to go down enough to offset the long-term picture of just a few years in the future. So I think a lot of folks are sort of doing that math in their head and realizing this is a good time to buy. They were in 2008. I think it'll be true in 2009 as well. Now let's go ahead and take a look at the short sale and foreclosure numbers. This is a way we get an idea of how many conventional sales are going on. Now short sales took up 17% of the marketplace. Foreclosures made up 24%. And conventional sales made up 59%. Those are actually pretty good numbers. I'm just glad to see the conventional sales making up more than half of the total number of deals that are going on in Santa Clara County. We'll see how that pans out in the long term. That seems like a pretty reasonable place for it to be right now. Short sales last month were at 16%. Foreclosures were at 29%. So we saw an increase in short sales, a decrease in foreclosures. But conventional still managed to stay the dominant factor at 55% of the deals that were taking place were conventional. Where are we going to go with this? I think this range, this ballpark is pretty realistic. There are some kind of disturbing trends I'm seeing relating to foreclosures, and part of that has to do with a lot of these folks who have gotten adjusted foreclosures, adjusted mortgages, folks who are facing foreclosure, who had their mortgages adjusted to a lower rate or adjusted to a certain amount per month. We're seeing a very high re-foreclosure rate on those folks, or a redefault rate on those folks, sometimes 70 to 80%. So what we've done is we've basically delayed short sales and foreclosures that might be happening now and put them off to later in the year or early next year. And my concern is that there may be another big bubble, because in addition to that, we're also seeing banks holding a lot of foreclosure properties off the market. Instead of putting them on the market, they're just leaving them sitting there. Enough of those things conspire together that could result in a big jump in foreclosures next year. It'd be tough to call when, depending on what the motivating factors are, but it wouldn't surprise me if they wanted to get them on there for the summer season, so we might see things happening in summer next year. But right now it's a little bit concerning. So we'll want to keep our eye on the foreclosure situation and what's going on there to see if we might see another big rally as far as the number of short sales and foreclosures that we see on the market early next year. Now let's go ahead and take a look at home prices. we can see they definitely dropped between 2007 and 2008 once this thing really started to hit us. And remember, last year around this time was really the big hit. October was when the stock market took its really big dump. October really was 1 year ago a very pivotal month for the market here in Santa Clara County. But what's interesting is you can see that we've actually had an increase in sales from the same time last year, or at least an increase in the home prices for properties when compared to the same time last year. The average let's see, change from last year was up 4.83%. That's a $33,240 increase. That's actually kind of encouraging. It's given the raw numbers we've got here in the county, that's going to be a reliable number. So the average price has definitely gone up, not a whole lot, under 5%. Where will we see things going next year? That's a tough one to call. It wouldn't surprise me if we see it either staying relatively flat or maybe even declining a little bit. Now let's go ahead and take a look at the same numbers for past months. We can see all the way back. The trend is pretty hard to miss. Right around February, we saw in October, November timeframe, we saw some big drops just like we did in the last year. But look at what's going on with the increases we saw in February, March, April. As soon as we got into 2009, things started to increase as far as average price was concerned. We've sort of flattened out here a little bit in the last few months. We've had a little bit of a spike in October. It'll be tough to see where it goes. I can't imagine we're going to see a whole lot more ramping up. There's still a pretty good amount of inventory out there. So I don't think we're going to see a huge increase in average price. But, it's really tough to tell what's going on here. It depends on when more properties hit the marketplace, and there's still a lot of foreclosures waiting to hit the market, and that'll have a dramatic effect on what the average price ends up being. And in this case, we had 4.92% increase just from September to October. $33,833 was the dollar amount for that change. Now let's go ahead and take a look at the days on market. We can see it's down from last year. Last year it was at 79 days on market. This year it is 69 for the month of October. That's definitely a realistic number. I don't think there's anything out of line with that for folks out there in Santa Clara County. Because Santa Clara County has so much variation. I mean, if you listen to my market analysis of just 3 other towns here in Santa Clara County, there's a huge amount of variety. Compare Los Gatos to Almaden Valley to Morgan Hill, and they're very different. So remember, these are just the county overall. Your specific case may be very different from this. And if you're interested in finding out what the specifics are for your property, feel free to get in touch. Now, the days on market numbers are down 12.66% when compared to the same time last year. That's 10 fewer days to get your home sold in 2009 than 2008. And if we look at days on market, just going back chronologically now, we're not skipping across months here, just looking at October year to year. We're looking at just in the past months. We can see that there was a increase during those winter months, and that's normally expected. Things tend to slow down the further you get into the end of the year, and then things they slope downward as we get into more action, as we can tend to head into the market when things sell a little bit more quickly. From September to October, the days on market decreased 1.43%. That is a one-day change, so not a huge change there. Now, I do appreciate you all taking the time to listen to these market analysis videos. I won't go through and read all of this contact information again. I already provided that to you at the beginning of the show, but I wanted to give you one last chance to jot anything down if you wanted to get in contact with me. I look forward to talking to you all next time, and I hope you achieve all of your real estate goals.